The US dollar continues to tumble yesterday at the start of a brand new trading week ahead of this Wednesday key risk event, which is the US Federal Reserve decision meeting, and as well as the Fed Chair press conference that's to be held on Thursday, 3:30 a.m. Singapore time. Interestingly, the US dollar index managed to plunge and hit a 4-month low yesterday, led by a strength in the sterling against the US dollar, where the sterling pound rose to a 6-month high. The major US stock indices continues to trade in a firm bullish tonality, where 3 major US stock indices managed to close in the green, which is the Dow Jones, the S&P 500, and the Nasdaq 100. The outlier, which will be the small cap Russell 2000, that shed marginally by 0.3% over here. In Asia Pacific stock market, despite Trump's threat of imposing a 25% tariff on South Korea products due to South Korean being not abiding the trade deal as proclaimed by Trump, that did not inflict a negative feedback loop in the Asia Pacific stock market. Rather, the Kospi 200 index managed to surge to a fresh all-time intraday high as we are speaking, up by 2.6%. And as well as our local Straits Times index continues to inch much higher, recovering from yesterday's losses. And we see other Asia Pacific stock index like the likes of ASX 200 continues to trade in the green. Hi, good morning. I'm Kelvin here. Welcome back to today's Daily Dose of Market Insights. Today will be the Tuesday, the 27th of January 2026. So as usual, before we jump straight into today's toned down Daily Dose, which I only cover 3 charts of the day, plus several updated technical levels for key asset classes to watch out for. Let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and it's not investment advice. Past information is not representative of future results. Right, so here we go. All right, so before we jump straight into the chart of the day over here, let's have a quick recap of what has taken shape yesterday in terms, as well as in today's early Asia session, in terms of news flow and the relevant economic data releases over here. So let's start with yesterday's trading price section on the FX market. So if you could look at my screen over here, let me share you my screen so that you guys can have a better view of the charts. All right, so hopefully everything is good. Yeah, great. Okay, so I think, where is it? Oops. I think it got deleted. I'm not sure where is it. Okay, 1 second. Yeah, this is the one. Right, my apologies, got to rearrange it. So hopefully it's up. Give me a couple of seconds to run it. Yeah, great. So what you could see on the screen over here is this 5-day rolling performance of the US dollar. Okay, let me do it again. Yes, 5-day. Yeah, so it's the 5-day rolling performance of the US dollar against other major currency as of now. We are speaking 27th of January 2026. So what I could see over here is that the dollar continues to weaken dramatically since last Friday. So the impact, the most significant impact was the weakness of the dollar yen, where it okay, mic test 1, 2, 3. It's just a slight technical glitch to the kind of the weaker internet connection that I have this morning. Where was I? Yeah, so I was talking about the state of the performance in the FX market. So what we could see over here is that yesterday the US dollar continues to actually tumble over here. So the weakness of the US dollar has continued, and that has been reinforced by that rumored joint intervention by Japan and US authorities to weaken the dollar yen, but that has not been made into any official announcement. And the story what we are hearing right now from the markets is more likely due to rate checking as authorized by the Bank of Japan, and as well as during Friday US session by this Reserve Bank of New York, as instructed by the as instructed by the US Treasury Department over here. So net overall, yesterday, what we could see over here is that we start to see a significant weakness on the dollar against the sterling as well. So if you look at the 5-day rolling performance, the dollar versus the sterling is the I would say that's the fourth weakest pair. The weakest one will be the dollar Aussie, where the dollar tumbled against the Aussie by negative 2.69%, followed by the dollar yen, negative 2.46%, and followed by the dollar Kiwi, down by negative 3.4%, and followed by the dollar against the sterling, down by negative 1.82% over here. So what you could see over here is that if you look at the technical chart of the US dollar index, we did mention that do keep a close eye watch on this multi-month range complex major range support range configuration that the US dollar index has been in place since the low of 1st of July, and right now it's approaching very close to this key major range support at 96.4. So if we could start to see a clear breakdown below 96.4 right after the key risk event that is particularly directly could have an indirect impact on the FX market for sure, will be the latest monetary policy stances as directed by the US Federal Reserve, which is this Wednesday FOMC meeting. So FOMC meeting, market participants is looking at no rate cut or rate hike stampede, but market will stay tuned to the US Federal Reserve Chairman press conference thereafter to look out for hints whether the US Federal Reserve is still keen to extend its interest rate cut policy this year, and most importantly, when will the next cut be over here? Will it be bring forward to somewhere in the second quarter, the early part of the later part of Q1, that means in March or either in April, or will it be right now as what market has been penciled in, which will come into the summer months of 2026, which is in June and July. So the fate of the US dollar index lines on that, but from a technical perspective, from a multi-day perspective, it seems still to be heading towards this 96.4 over here. So I'll touch more about that tomorrow and as well as Thursday, as we head closer towards this key risk event, which is the US Federal Reserve Monetary Policy meeting, and as well as Fed Chair Powell press conference thereafter. So overall, from an intraday perspective, the US dollar index still remains weak, heading towards to give a big retest on this key major range support level at 96.4. Right, so that's for the US dollar index. So now over at the state of the performance of the major US stock indices. So this week, the major US stock indices will also face a pivotal week as well, due to the fact that, especially on the S&P and the Nasdaq 100, given that the 4 mega cap technology stocks that has significant weightage in both S&P and the Nasdaq 100 will report their respective earnings this week, which is Meta, Microsoft, Tesla, and as well followed by Apple. So interestingly, ahead of these 4 mega cap technology stocks earnings release, the S&P and the Nasdaq 100 managed to stage bounces, and all of them, both of them managed to close back above the 20-day moving average, where last week they actually did a slight below it due to that tit for tat measures between US and long-time airlines NATO/EU members over the ownership of Greenland. So the losses has really been recovered, and yesterday performance is among par among the 3 major US stock indices, where the S&P is up 0.5%, the Nasdaq up 0.42%, the Dow Jones up 0.64%. So it's about the same, except for the Russell 2000 that managed to close in the red, down by negative 3.6%, negative 0.36%. But bear in mind that this should be pretty much common for a particular high flying major stock in this indices performance in the US. So the top performer so far year to date is still the Russell 2000, that is up by close to 6.74%. based on yesterday's closing price that surpassed the gain that is being seen on the S&P, the Nasdaq, and even the Dow Jones Industrial Average. So it's more like a profit taking that is taking shape on the Russell 2000 as market participants in a very short term rotate into the laggards, which is the Nasdaq 100 for this week ahead of the earnings report from the 4 mega cap technology stocks over here. So if you look at the heat map of the S&P 500 yesterday, we see more greens than red. And among the mega cap technology stocks, we see the one that is reporting earnings this week. 3 of them actually closed in the green. So Microsoft up 0.93%. Apple is the top performer yesterday, up 2.97%, followed by Meta up by 2.06%, and Google up 1.57%. And the one that is deeply in the red is Tesla, down negative 3.09%, which is also reporting earnings as well this week. So if you were to look at the heat map of the 11 sectorial performance in the from a sector perspective. So from a sector perspective, what I could see over here is that a rather broad-based rally, not totally centered on the mega cap technology stock yesterday. So we know that mega cap technology stocks has been in the area of communication services, where we have 2 big heavyweights, which is Alphabet, owner of Google, and as well as Meta Platforms, owner of Facebook. And these 2 are the top performer, up 1.13% and 0.74% for the technology. But financials and utilities continues to play a significant portion of the overall US stock market gains yesterday by appearing to be the 3rd and the 4th outperformer yesterday with a gain of 0.56% each. So overall, it's still a healthy breadth market that's being seen yesterday in the performance of the intraday movement of the US stock market over here. Right. So particular news flow that this one that I mentioned is that Trump votes to raise tariffs to 25% on South Korea goods, but that doesn't have a material impact. So he posted he just basically his social media post on Monday where he stated that the new rate would apply to autos, lumber, and pharmaceutical products and all other reciprocal tariffs under the existing agreement. The president set a 15% levy on South Korea exports over here. So basically, he claimed that the South Korea parliament or legislature is not living up to its deal, and he decided to increase the 50% levy by 10 percentage point to 25%. But that doesn't dent the current bullish risk-on environment due to a weaker US dollar that has been playing out positively on the Asia Pacific stock market. So even the dollar yen that plunges on last Friday, the Nikkei 225 managed to recover a bit of portion of it, up by 0.25% and now trading at an intraday high. The Hang Seng Index up by 1.10%, which came in within our expectation, where we see the Hang Seng Index continues to trade within a bullish trend. Later I'll share with you guys on the Hang Seng, the Hong Kong 33 CFD index that is representing the Hang Seng Index in our platform. And the other Asia Pacific market, the China A shares continues to rose as well today, up 0.59% as we are speaking. The smaller concentrated China A50 benchmark stock indices, another benchmark stock indices, but that's only consists of the 50 largest stocks in Shanghai, listed on the Shanghai Exchange, up by 1.05%. And the one that is being hit by the tariffs, South Korea, Kospi 200, which is the benchmark stock index in South Korea stock market, up by a whopping 2.46% to fresh all-time high, totally ignoring that tariff threat that is Trump tweeted yesterday and basking on the limelight of a weaker US dollar. All right, and our STI is up by 0.85%, also inching up to a fresh all-time high, and the ASX 200 as well, up by 0.93%. So overall, what I could see is still a risk-on sentiment based on what I have shared with you guys at the start of today's daily dose. So let us now cover some updated technical levels on the various instruments on the share before we jump straight into the chart of the day. So let us start with the FX market first over here. So over at the FX market, let us start with the sterling dollar. Right, so the sterling dollar yesterday was the top performer among the major currency against the US dollar at its hit a 6-month high, which right exactly at our congestion zone of 1.3680, 1.3715 level over here. So overall, no key bearish exhaustion that's being seen on the hourly RSI, as the hourly RSI continues to be holding above a parallel ascending trend line support level over here. So what I could do over here is that yesterday we do have a pivotal support at 135.88. So given this strong movement on the intraday basis that's being seen on the sterling dollar, I will adjust my pivotal support level for today to 136.36 over here, which is very close to yesterday's European session low over here, as well as the start of the US session as well at around 136.44. So 136.36, if you do a Fibo retracement of this minor impulsive upmove sequence from the intraday low of 22nd of January all the way up to yesterday's US session high, that confluence with the 23.6% Fibo retracement. So using a Titan adjusted short-term pivotal support on the sterling pound, maintain that bullish bias, 136.36. Next intermediate resistance level to watch on the intraday basis will be the next resistance zone at 137.65, 137.90, which confluence with a Fibo extension level. Only a bearish breakdown below 136.36 will negate this direct push-up scenario and see a minor corrective pullback to retest 135.88 again. All right, that's for the sterling pound over here. So next up, updated levels I want to share with you guys will be the the major US stock indices, starting with the Dow Jones Industrial Average. So the Dow Jones Industrial Average, which is in the US Wall Street 30 as represented in our platform, managed to surpass above the 20-day moving average. So that being said, this will be my new pivotal support, a Titan one for today from a risk management perspective. So that will be at 49. Okay, give me a minute. Let me put it down. 0.30. All right. So let me expand my screen and also let me expand the screen so that you guys could have a better view of the charts. All right. So this one, 49.03. So this one, let me adjust it. Okay, let me tidy it up. All right, so adjust my pivotal support level to 49,030 on the US Wall Street 30 CFD index. Resistance level to watch for today on an intraday basis will be at 49,606, which is the current all-time high area. Above it, potentially take us up higher towards 49,805, pardon me, 49,840. So that will be our chart. That will be the updated levels on the US Wall Street 30. Only a bearish breakdown below 49,030 will invalidate this direct push up and see a minor corrective pullback to retest yesterday's Monday swing low area at 48,770 / 48,650 again. All right. Updated levels on the S&P 500. So S&P 500 also surpassed above the 20-day moving average. So two key support level to watch for today. The first support level will be this former minor swing high, now turns into a pullback support at 6,945, which is today's Asia session low over here, 6,945. Maximum 6,923 allowable for this minor pullback to take shape. So I don't want to put it so tight at 6,945 just in case of any whipsaw. So I use it slightly lower, which is the 20-day moving average, as well confluence with this bunch of congestion area here that's been seen on last Friday. So 6,923 will be my adjusted short-term pivotal support level. Maintain a bullish bias for a potential direct push-up, 7,705, current all-time high area. A breakup above it exposes 7,038, 7,045 on these updated technical levels on the intraday basis for the US SPX 500. Only a bearish breakdown below 6,923 and the hourly close below it will invalidate this direct push-up scenario and expose the next intermediate support zone, which is yesterday's Asia session low, that confluence with the rising 50-day moving average as well at 6,877 / 6,860 level. All right, so that is for the updated levels on these asset classes. So let us now move on to the charts of the day. So one charts of the day I will share you guys will be on the Asia Pacific stock market, which will be the Hong Kong 33, representing the Hang Seng Index over here. So the Hong Kong 33 managed to clear above this minor intermediate resistance, which is the upside trigger level that I mentioned yesterday, 26,922, and now hit the next resistance level at 27,175. Overall, the RSI, yes, it hit the overbought level, but there is no bearish divergence. All right, price action shaping a higher high, so indicating that yes, there could be a minor pullback, but this minor pullback should be quite shallow instead. So with that, two key support level to watch out for today in my chart of the day, which is one of my charts of the day, which is the Hong Kong 33, representing the Hang Seng Index, will be 26,922, followed by my Titan pivotal support for today at 26,637, which confluence with yesterday's Friday's US session minor swing low and coming very close to the upper limit, the lower limit of this minor descending channel that is still in place since 16th of December 2025 low. So that will be at 26,637. Okay, let me stretch out from here. 26,637. 637. Okay, so this will be the normal support level. All right, let me explain everything. First, intermediate support level to watch as we maintain our bullish bias on the Hong Kong 33, that being at our charts, one of our charts of the day, given the bullish breakout from this upside trigger level at 26,922, now turns into a first pullback support level to watch. Maximum allowable pullback will be at 26,637 to maintain this bullish bias. So as long as Titan adjusted pivotal support at 26,637 holds, above 27,175, we'll see a push up to test the major resistance level at 27,500, pardon me, at 27,500. Only a bearish breakdown below 26,637 will negate this bullish tone and see it sliding downwards to retest 26,480, maximum 26,330, 26,250. And why 27,500 is a key major resistance level? Because if you go to the weekly time frame chart of the Hong Kong 33, 27,500 confluence with the retest that is being seen on October last year, and as well as confluence with this long-term descending trend line that has been in play that managed to cap previous multi-month rally since its fresh all-time high that was made long time ago on the 29th of January 2018. A weekly close above 27,500 will cement our view that the Hong Kong 33 CFD index or the Hang Seng Index is on the progress towards a major potential multi-month uptrend. All right, so that is why 27,500 is very, very key on the Hong Kong 33. The next chart of the day will be the Nasdaq 100. So the Nasdaq 100, before I jump into the intraday chart, there is a, you know that the Nasdaq 100 has been trapped in a 4-week plus or 1 month plus of a tight range trading that can't break above 23,830. But very interestingly, based on the current price action right now, the daily RSI is now giving a pre-bullish breakout signal by breaking above this parallel descending trend line. As we could see over here, the price action that's breaking above this parallel descending trend line. So indicating there is a high chance that this 23,830 may be potentially taken out today. So that being said, this will be one of my next chart of the day on the Nasdaq 100, looking for a potential bullish breakout above 27,830. So in fact, it's actually breaking out right now as we are speaking. So if we could have an hourly close thereafter at 25,830, I would actually tighten my pivotal support level that we have yesterday at this 23,350 over here to 25,507, which is the 20-day moving average. Above 25,830 on the intraday basis will potentially seek out 26,107, which is the minor swing high area of 31st of October and 3rd of November last year, before retesting the current all-time high at 26,290 that was printed in late October. last year. Only a bearish breakdown below 25,350 will invalidate today's bullish breakout scenario, or today's bullish bias on the Nasdaq 100 to see a choppy downward drift back again towards 25,105, 25,030 next over here. Okay, and the last chart of the day I will share with you guys will be Gold XAU/USD over here. So for Gold XAU/USD, price action continues to be in a bullish dynamic as price action on the hourly RSI managed to shape a bounce and a retest, shape a bounce after a retest right exactly at a parallel key ascending trendline support, and the retest and the rebound on the hourly RSI managed for it to go back up above the 50 level mark, indicating that short-term bullish momentum still remains intact. But however, it still hasn't cleared above our first resistance level that got tested yesterday, 5,094, 5,149. So hence, given say that even though it managed to bounce off from our first support at the 5,000 level, given that it can't clear above 5,149 yet, I do not want to tighten my pivotal support to 5,000 level. So I'm still be more patient. If we have an hourly close above 5,149, then I will tighten it to 5,000 level. So for now, I will use the short-term pivotal support level at 4,888. Next resistance zone level to watch will be at 5,227, 5,242, followed by 5,325, 5,384. Only a bearish breakdown below 4,888 will invalidate this direct push-up scenario and see a deeper minor corrective pullback to revisit 4,775, 4,685, 4,684, pardon me, within a medium-term uptrend phase for gold that is still intact. Right, so that sum up my three charts of the day for today. One will be Gold XAU/USD, the Nasdaq 100, and the Hong Kong 33 CFD. So before we end our daily dose for today, let's have a quick look at the economic data. What are the key data to look out for in the European session? So today will be the 27th of January, Thursday. So over at the European session, thereafter will be rather quiet until the start of the US session, where we have one tier 1 economic data to chew on, will be 11 p.m. Singapore time. There is the Conference Board consumer confidence data. So market is expecting a slight recovery to 90.9 from 89.1 that was printed previously in December. Then thereafter will be a quiet session, and at 1 a.m. Singapore time, you have ECB President Lagarde speaking. So that could potentially influence the influence the euro dollar and the euro crosses. And before the start of our daily dose tomorrow at 11 a.m., at 8:30 a.m. Singapore time, we have Australia key tier 1 data, which is the inflation rate. So market participants will be focusing on the trim min rate, which is considered as a core rate on a year-on-year basis for the month of December. So market is still expecting a stubbornly, we call it rather high inflation number to maintain at 3.2% year-on-year in December, unchanged from November print of the level. So if inflation continues to remain rather high, that could support RBA's stance of keeping ending its interest rate cut cycle and keeping rates on hold for a period of time, and that could continues to support this ongoing bullish trend in the Aussie dollar. All right, so with that, that sum up today's daily dose of market insights. I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.